Should focus and talk about markets which are surprising almost everybody on the street with its resilience. In fact, FIs have also remained buyers for most part of the last fortnight, but many on the street believe this rally is uncalled for. Reality is very different on the ground. Economy and the markets are divorced and they're not moving in tandem. Vaibhav Sanghavi is here with us. Vaibhav, what's your position right now in the market? They say that don't ask fund managers what they feel, ask them what they're doing, and that actually tells their right position. What are you doing right now? How's your long short positioning?
Okay, so Ajay, in our fund, right, I mean, we have strategies which is across an absolute return and your relative return as well. So in case of our absolute return products, I mean, what we are doing is basically at this point in time, having some cash, and the relative percentage of hedges are a little higher as compared to our history. So there we are taking a little cautious stand, because not that we are extremely bearish on the market, but what we do think is basically that before market kind of consolidates and moves up further, we'll need to have a healthy correction, and that is where we do think that market are probably headed in the extremely short term. Having said that, in the medium term, my sense is basically we are to move higher. Because as economies kind of stabilizes and people are kind of out of lockdown and things open up, the month-on-month data, or probably the economic data on a month-on-month basis, is likely to improve. So there we are probably waiting to see that in the shorter term, if we can get some amount of cool off, is where we will probably look forward to kind of deploy our money.
Right. No, fair point. So you remain constructive, but to make the market healthier for much more, bullish calls to be taken or bullish positions to be taken, you believe that some softening will only make the market healthier.
Of course,
right?
Because you can't have a market which is kind of linear one way up. Probably because then the potential correction which may happen, can be pretty sharp. And can be shallow as well. So therein, the wider market may probably get hit. So if you are looking from a medium to longer term perspective, corrections or a small bout of corrections in the health is very healthy for the market. So that people kind of change hands, and on technical basis it becomes pretty strong. So from a fundamental aspect, as I said, from an optical standpoint of view, the P's continue to look expensive. But FY21 being gone, I think people will be looking at FY22, and that is where the comfort will come from.
Sure. Vaibhav, what do you make of this argument which is being made that what is fueling emerging markets and rally in India is actually overseas liquidity, which is finding its way? This has been spoken about over a month now, but actually some meaningful evidence of FI trade, FI flows resumption has only happened in the last 10 days. You also speak to your peers and your business partners overseas. What are your inputs collecting from there?
No, of course. See, from a global standpoint of view, the dollar index, which you are seeing at about 93.5, there is a view out there saying that dollar can be in a longer term bearish scenario, and if that is the case, then you will see money finding its way into different asset classes, and that is why you are looking at, on one hand, gold kind of appreciating, at the same time bond yields coming down, and equities across the globe kind of performing, including your emerging markets, which is considered to be a risk asset. Now, when money is flowing, it's the liquidity, sea of liquidity sails all the boats, and that is what exactly is happening. So there is definitely some amount of fact that the global liquidity is helping all the asset classes. And my sense is basically because of the monetary stimuluses and and fiscal stimulus, which is close to about $20 trillion, which has been happening this year. It's unprecedented. It has to find way into assets, and that is why we from our end also, we do say that while markets kind of look a little bit stretched, from a medium-term perspective, I am still constructive on the market.
Okay. Vaibhav, let's pull up some of the steel counters. They are the best performing in trade today. it's also coinciding on a day when Jeffries put out the note being constructive on global cyclicals. Even if you look at the commentary coming from some of the steel companies, which is actually not that bad. Tata Steel is gaining 5%, followed by JSPL. SAIL also was pretty decent recently. What are your thoughts on the global cyclicals, especially commodity-led like steel?
Again, it's the same argument where there are two parts to it. One is your liquidity, and the other is the incremental data which is coming from a global economic standpoint of view as well. So, for example, China. If you are looking at the economic numbers which are coming from there, they are kind of improving. In terms of the steel prices, in terms of the iron ore prices, which we are seeing, both are in positive traction. What we also do see is basically this liquidity again finding its way into commodities as well, wherein that is why you are seeing gold and silver kind of move. But leaving that aside, from an economic standpoint of view as well, we are seeing some firming of prices, base metal prices, which will probably lead a better health for the steel companies. We at the end in India as well, as and when on a month-on-month data again kind of start improving, there would be a hope that the metal consumption also will start to improve. So more or less, I think it is a combination of a global liquidity aided money flow into commodities, along with the China economic data, which is getting positive, is what is leading to the whole metals pack. And my sense is basically this may continue for a while.
Vaibhav, what is a comfortable area to start creating short or plan your short trades if one were the portfolio has been riding through longs from the March lows and now is getting uncomfortable, doesn't want to really liquidate cash positions? Which are the areas to start looking for shorts? Is banking an area or some large NBFCs?
No, unfortunately, I don't think banking is an area, purely because banking has been actually an underperformer over the last couple of months vis-a-vis your Nifty index. So my sense is basically once the capital raising is over, or larger part of the capital raising is over, we should see some traction coming back to banking rather than going the other way. Of course, there has been some amount of realignment of portfolios in the banking sector, but my sense is basically on an overall basis, banking should kind of remain strong. Having said that, in terms of NBFCs is where my sense is basically there is some pain continuing there. And you might want to look at it that because that sector might kind of underperform in the immediate short to medium term. So that's one. And apart from that, those sectors which have kind of rallied pretty hard, the valuations have gone kind of way higher than the averages, are the ones probably to look for, at least in the shorter term. But it is extremely tough to find those kind of short opportunities in the market, which is kind of having the momentum which is having at this point in time. So you have to be pretty agile on the short positions as well.
However, talking of momentum, I think the momentum which pharma has right now hasn't really been seen in many years. In fact, it's kind of found its lost mojo. Are you positive on pharma? What kind of names, if yes, domestic oriented? Is it the API companies you're looking at, or global pharma, large caps? Because there's a very good assortment available. According to your risk appetite, small, mid, large, mega cap, everything is here.
No, of course, Ajay, you're right in the sense that API companies have delivered fantastic numbers till now. At the end of, over and above that also, the numbers on an overall basis also have not disappointed purely because the cost control measures have been, phenomenal. And it's not about only pharma. Across the board, the cost control measures have actually led the numbers to be much better than expected. Having said, coming back to the pharma, we do think that the sector still has momentum. They've already re-rated in terms of the PE. My sense is you have to be extremely selective in finding the good opportunities from here onwards, wherein we do think that the domestic pricing or domestic companies, are priced pretty, fair or rich, I would say. Whereas there is still some opportunity on US specialty pharma companies which can give some amount of leeway as well from going from here. So you have to be pretty, bottoms up driven, at least in the pharma sector, after the fantastic rally which we have seen till now.
Which is the one area where you guys are really bullish on, like the most overweight area where some serious amount of wealth can be made over the next 2 to 3 years and has become a part of your core portfolio and which you track very closely, and perhaps the market is not really understanding the potential, say where pharma was 1.5 to 2 years back, or maybe telecom was 1 year back, something which you are looking at in that light?
Yeah, you're asking for my secrets, but in any case, what I would do think is basically that consumer discretionary is something which we are very keen on. And my sense is basically that once the kind of things normalizes in terms of the COVID, the accumulated savings which people have not kind of spent in the last 3 to 4 months or 5 months is going to come and hit the streets in terms of their spending power. So consumer discretionary is a sector to look from medium-term perspective. And of course, from a longer-term perspective, being India being a consumer-driven economy, my sense is basically, consumer discretionary is something which you should probably look as a medium to long-term bet, which we are very positive on.
And Tara, guys, do we have a lot of talk around the Atmanirbhar mission of our country, be it the API manufacturing where we want to forge ahead and reduce dependence on China, be it auto component manufacturing, and my colleague broke the story earlier. We are also making a serious push toward consumer durable manufacturing here in India. The way we used to import large TVs from US, billions of dollars, $1.5 billion last year, we want to replicate the same here. Any stocks or theme or sub areas which you have highlighted which can be a good Atmanirbhar play from the market side?
Sure. So you will find definitely some places in consumer durables actually which can stand as a beneficiary to this whole Atmanirbhar mission, which is strongly pushed by the government. So my sense is basically there would be opportunity, but to be very honest, if you ask me, apart from a couple of API manufacturers or your consumer durables, we don't find a whole lot of opportunities in the current scheme of things. My sense is basically as things kind of a company evolve or things kind of improve, we may see some opportunities coming up later on. But this is something which definitely has to be kept in mind as a thematic play. Should this kind of progress as per expectations.
Right. All right, Vaibhav, we'll let you go on that one. Thanks so much for your time today. Great chatting. I'll call you up later in the evening for a casual chat.